Building wealth does not happen with just luck. It's about strategy, discipline, and making informed decisions. Few people understand this better than Warren Buffett, one of the most successful investors of all time. Welcome to Forever Finance, where we want to live our lives our own way. Buffett has shared countless nuggets of wisdom over the decades, but today we'll break down 5 key steps to building wealth that come directly from his teachings. Stick around to learn how you can transform your financial future, starting today. Step 1. The importance of financial education and continuous learning. Buffett is famously known for saying, "The best investment you can make is in yourself." But what does that mean? At the heart of this message is the importance of financial education and lifelong learning. Warren Buffett spends about 80% of his day reading. Yes, 80%. He credits much of his success to the knowledge he has accumulated over time by reading books, financial reports, and staying informed about the world around him. So what can we learn from this? To get rich, you must build a strong foundation of knowledge, particularly around finance and investing. The financial world is ever-changing, and understanding how it works gives you a critical edge. Read books, take courses, listen to podcasts, and absorb all the information you can. The more you know, the more informed your decisions will be. But it doesn't stop there. The learning process is continuous. Buffett encourages us to remain students throughout our lives. As new opportunities and challenges emerge, those who keep learning will be able to adapt, while others may fall behind. So, start by dedicating time each day to expanding your financial knowledge. Whether it's understanding how stocks work, learning about real estate, or studying up on crypto, knowledge will be your greatest asset. Step 2. How to identify and seize investment opportunities. Identifying great investment opportunities is one of Buffett's superpowers. His philosophy is simple. Look for undervalued businesses with strong fundamentals and a long-term growth potential. Buffett follows a strategy called value investing. He looks for companies that are trading for less than their intrinsic value. This means they are worth more than what the market currently thinks they are. The key is patience. He waits until the market undervalues a stock and then swoops in to buy it at a discount. Buffett often says, "Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble." This highlights the importance of being ready when a great investment presents itself. So how can you apply this strategy in your own life? First, do your research. Look for companies with strong management, a competitive edge, and a track record of profitability. Don't chase trends or invest in things you don't understand. Instead, focus on solid, proven businesses that are temporarily undervalued. Next, don't be afraid to take action when the opportunity arises. Sometimes the best opportunities come when others are fearful, as Buffett reminds us with his famous advice, "Be fearful when others are greedy, and greedy when others are fearful." If you've done your homework and found a great investment, seize the opportunity. It's better to act decisively on a well-researched opportunity than to wait and miss out entirely. Step 3. Smart saving techniques to maximize your capital. Now let's talk about saving. While investing is crucial to building wealth, saving is the cornerstone that makes it possible. Warren Buffett is a huge proponent of living below your means and maximizing your savings to invest more over time. He famously said, "Do not save what is left after spending, but spend what is left after saving." This flips the typical approach on its head. Instead of spending first and saving whatever's left, Buffett advises us to save first, then live off the rest. To follow this principle, start by setting a savings target. This is normally a percentage of your income, and automate your savings if possible. As you progress along your financial journey, you will be able to work towards your savings target. When you save consistently and diligently, you'll build the capital needed to make significant investments. But it's not just about the amount you save, it's also about how smartly you manage those savings. Buffett warns against letting your money sit idle. While having an emergency fund is essential, excess cash in low-interest accounts loses value over time due to inflation. Instead, Direct your savings toward investments that will grow over time, such as stocks, bonds, or real estate. By doing so, you'll maximize the potential of your savings and build a solid base to fuel your future investments. If you have found value from this video, please subscribe to the channel. This will make sure you are aware when more valuable videos are uploaded. Don't forget to share this with family or friends, so they may also share in the same value. Step 4. The power of compounding and how to make it work for you. One of the most powerful forces in wealth building is compounding, something Buffett has relied on to build his fortune. He once said, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." Compounding is essentially earning returns on your returns. It works like this. When you invest, you not only earn money on your initial capital, but also on the interest or profits that those investments generate. Over time, this snowball effect creates exponential growth in your wealth. The earlier you start investing, the more time you give your money to compound. Even small amounts invested consistently can grow into significant wealth over decades. Let's break it down with an example. Imagine you invest $10,000 at a 7% annual return. In the first year, you'll earn $700. In the second year, you'll earn 7% not just on your original $10,000, but also on the $700, bringing your total earnings to $1,449. As the years go by, the returns keep growing and growing. The key is patience. Compounding doesn't deliver huge results overnight, but over years, it can create life-changing wealth. The longer you let your investments grow, the bigger the impact of compounding will be. This is why Buffett urges investors to take a long-term view. Avoid get-rich-quick schemes or day trading. Instead, invest in solid, reliable assets and let time and compounding do the heavy lifting. Step 5. Strategies for building and diversifying your investment portfolio. Building a robust investment portfolio is another key to growing your wealth. Buffett's approach focuses on building a portfolio of high-quality assets that can stand the test of time. But just as important as building your portfolio is diversifying it. Buffett has often emphasized the importance of understanding what you invest in. He famously said, "Risk comes from not knowing what you're doing." This doesn't mean you should avoid risk entirely. After all investments carry some level of risk, but it does mean you should only invest in things you thoroughly understand. One of Buffett's favorite strategies is to concentrate his investments in a few great companies that he knows well, rather than spreading his money too thinly across hundreds of stocks. This allows him to focus on quality rather than quantity. However, for most of us, it's also important to diversify across different asset classes: stocks, bonds, real estate, and even alternative investments. Diversification helps spread risk and ensures that if one asset underperforms, others in your portfolio may still grow. To start building your portfolio, consider investing in index funds or ETFs, which give you exposure to a wide range of assets. From there, gradually explore individual stocks or other investments as you become more confident in your research and decision making. Remember, investing is a marathon, not a sprint. Your goal is to build a portfolio that grows steadily over time, not one that will make you rich overnight. The journey to wealth may seem daunting. Following these steps consistently can set you on the right path. Start small, keep learning, and remember, building wealth is about patience, discipline, and making informed decisions. Achieving these steps is not the only way to success. There are plenty of daily habits that will work against your goals. Check out this video to learn more about the habits to avoid.